We're going to start the regular meeting of the Budget and Finance Committee. We have a quorum. Mr. Koretz, Mr. Rosendahl, myself, Bernard Parks, as chair. Colleagues, if would like to go through the agenda and see if we can go through some consent items. Items 1, 2, and 3 are workers' comp cases. If we can consent those.
No.
Okay. Mr. Koretz, did you, on the top 3 are all workers' comp cases?
I'm fine.
Okay, so we move those as,
2 to 1.
as a communication.
Communication.
Thank you.
Okay, sorry, got carried away. As a communication, 1, 2, and 3 are workers' comp. We'll move that on consent. Also, if we can move item 6, unless committee members have a specific case they'd like to discuss in closed session, we can just move that item on the city attorney's litigation accounts on consent.
I'm sorry, which one?
On number 6, unless you have specific cases you want to go through, we can move the litigation, both the litigation account on consent, number 6.
I know specifically we talked about one in closed session.
Yeah.
And I don't agree with our position on that one.
But I think they may need to brief you because I think it's 2 different cases. There's the one I'm thinking of.
Yeah. And on my particular end of it, I disagreed with us in closed session about that as well.
Let me ask Gary, maybe you could brief Councilman Rosendahl on the item we dealt with last Monday in closed session on the one case that's been there historically on the agenda. Sure. Well, the thing is that we're trying to do it on consent, but he's got an interest in the item as it relates to the city's position as we go forward on the litigation. Okay. All right.
Because I want to be clear where I'm coming from on that.
Yeah.
Okay.
Oh, I can see that one listed on the table there. So that's the same.
Yeah, I think we dealt with it last week. Did you see it again this week?
I don't see it this week, but last week I did, but I don't know what became of that.
This is the cases that are pending coming through the 100,000 and below account or the 100,000 above account.
Yeah, this was above, this was the,
But I think that report we saw last week was the overall litigation account.
that's correct.
Okay. Or litigation cases.
Right.
Okay. So if we move that item 6, and then Gary will brief you on that case you had a concern about. Okay, then we could also go consent on number 10, which is we would be supporting the HCED committee's recommendation as amended. Any concerns on that? Okay. Let me just ask on number 10, if we could ask the clerk to get with LA Housing Department and just in your committee report provide us a overview of the issues regarding the delinquent contractors on the year-round emergency shelter program, and then how this how this motion will impact this specific issue. And so if we could just ask them for that, their comments on that, and we could add that to the committee report. And then that's on item 10. Item 12 also we'd ask to go consent on. That's something that's already been resolved in the Treasurer's office.
I'm with you.
We'll move on that. Item 15, also we go consent on.
Yep.
And that was a report back asked by this committee. I would just ask the clerk to get with Planning Department and just get some clarification that in their report they give us dollar figures. What I'd like to have in the committee report is, in addition to the dollar figures, that we get a percentage of cost recovery on the 3 categories: single-family, historic preservation, and appeals, and that we also clarify what percentages are subsidy provided on these fees for those 3 particular areas. We'd also ask the criteria they use to determine subsidy, And the final thing that we asked, if there was no subsidy, what would be the full cost recovery?
Sounds good.
Okay. So, and that's number 15. So if we can move those items 1, 2, 3, which is a 2 to 1, items 6, 10, 12, and 15 as 3-0, we can go to, that'd be the consent. Okay? Let me ask also on number 9, if we can continue that for 2 weeks and ask the CAO to get with the CLA and resolve the issues that are on our notes that address this issue to make sure that there is no citywide or city general fund impact, and that all of these issues that are being addressed, we can resolve them with this motion. Because there's some disagreement as to whether the money is there to do what the motion is asked. So we can continue that for a 2-week period. Okay, if we can do that. Okay, and then we'll go in closed session now on items 4 and 5, and then we'll come back for items 7, 8, 11, and we'll deal with 13 and 14 together.
Item number 7 is the City Administrative Officer Report and Resolution relative to authority for the issuance of the 2011 Tax and Revenue Anticipation Notes in amount not to exceed $1.3 billion.
Good afternoon.
Good afternoon. Hata CEO Office. The CAO requests authority to issue up to $1.3 billion in short-term tax and revenue anticipation notes. The note proceeds will be used to pay the annual contributions to the Fire and Police Pension Fund and the Los Angeles City Employees Retirement System in July, and to provide cash flow needs. TRAN allows the city to take advantage of the prepayment discount. If the city pays its annual contributions in July, it saves approximately $31 million versus paying on a biweekly basis. We recommend to sell the notes on a negotiated basis. We have selected J.P. Morgan, De La Rosa, Citi, and Loop Capital Markets as our underwriters for TRAN. We plan to sell the notes at the end of June, approximately on June 28th. There is no fiscal impact, as these notes will be repaid within the fiscal year.
Let me ask just a couple of basic things. What is the difference from the financing team and the underwriting team?
The financing team consists of our financial advisors.
That's our advisors.
Our financial advisors for the TRAN this year is K&N Public Finance and Acacia Financial Group, as well as our bond counsel and disclosure counsel. The finance team incorporates the whole team, the legal team, and on the finance side.
And then let me ask, on the issue of today, we're approving your report, but are the attachments available today, or is that something we'll get in council?
The attachments are available today.
Okay. 'Cause I didn't get any attached. I just got the CAO report.
Oh, I think it is on the website. I can give you.
No, I just want to make sure the clerk has it, so when it gets to council, I don't need to see. But when it gets to council, we have the whole package. That's what we're
Right.
trying to get approved.
Yes.
So we get attachments, what, 1, 2, and 3?
Yes.
So you make sure the clerk has that.
Okay.
Okay. The other thing asking is that, could you just, for the committee's awareness and also public, the whole issue on page 6, paragraph 2 of your report, to just talk a minute about that whole capacity issue of why you selected these firms and what the expectation is if they can't sell them all and things of that nature.
Okay. We selected J.P. Morgan, Citi, Loop Capital, and De La Rosa, partly based on their underwriting capacity. That is, if the city cannot sell its notes, that the underwriters will take it into their inventory. For example, last year, we were unable to sell approximately $250 million. And J.P. Morgan was our lead underwriter last year, and they took that into inventory, and then the next day, they resold the notes.
And then one thing I'd like to see, and it's something just that may reduce the number of questions when this comes to council, You did a report on the criteria you used to select the underwriters, and that's under CF number 10-1763. If you could attach that to this file so that as you go through it, council members will have access to not only the outcome, but the criteria.
Okay.
And then also on that same CF number, there's a communication that talks about prior deals.
Mhm.
You can attach both of those. I think we will maybe limit or at least educate some of the council members as to what you've done to get to this point. So we can ask those two things to be given to the clerks that are going to add to the committee report.
Okay, will do.
Any questions?
No.
Yeah, just to make it clear, you are recommending that we make this contribution in July so that we enjoy the prepayment savings of $31+ million, right?
Yes, that's correct.
Okay, somehow it didn't sound clear to me, so, okay, thank you.
And then I got the last couple of questions I have is that anything in the sense of some of the articles about the municipal bonds and downgrading, is that impacting us at all as far as the timing?
No, this is short-term ratings versus the long-term. And actually today, Natalie, Miguel, and Ray are meeting with the rating agencies, and we should be able to get our ratings by the end of this week. And I should be able to report that this Friday in council.
So those ratings will come out before we go to market?
Yes.
Okay. And then the other issue in your report, you commented on, could you just give us a little background on the deep outreach and attractive ideas that the companies came up with that caused them to be selected above the other folks in the RFP?
Sure. JP Morgan has what they put together a selling group, meaning they added some firms like Charles Schwab to do the retail marketing. De La Rosa also has a huge California retail market that we could tap into.
And you said that what kind of group is a sounding group?
Excuse me?
What kind of group did you say they had?
It's a selling group,
Selling group.
meaning they add firms such as Charles Schwab to help sell our notes.
All right. Any other questions? Okay, we'll move that item. If we could just have those items attached, because I think we could probably predict what some of the questions are, and I think you covered them in your criteria report as to that banking responsibility issue. You've adapted some of those into the criteria, so they're available at council.
Okay.
Thank you. We'll move that item with those couple of requests and instructions. Next item.
Item number 8 is City Administrative Officer and City Attorney reports, resolution and ordinance relative to authority for the issuance of general obligation bonds, Series 2011A for stormwater projects, Prop O, and refunding Series 2011B.
Alto CAO Office. The CAO requests authority to issue up to $125 million in general obligation bonds to finance stormwater projects, and also requests authority to issue up to $600 million in refunding bonds through June 30th, 2012. Currently, we have identified approximately $252 million in refunding candidates, which will generate approximately $20 million in net present value savings. In November 2004, the voters approved Proposition O, which provides for a total authorization of $500 million in bonds for stormwater-related projects. After this issuance, the remaining authorization will be $52.5 million. These bonds will be issued on a competitive basis. The estimated sale date is July 19. There will be no fiscal impact on the general fund, as these bonds will be paid from ad valorem taxes. And for the debt impact, it will be level debt service, approximately $8.6 million over 20 years.
Let me ask, why competitive on these as opposed to negotiated?
Currently, by charter, we must issue general obligation bonds competitively.
Just by charter. Okay, and then the other issue, if we're going to be moving on the $125 million on stormwater bonds, do we have a list of the $117 million worth of projects that they propose? Is that something that's been put together and is available?
Yes, we do. Kendrick from Bureau Engineering can discuss more on the project.
Good afternoon, Kendrick Okuda, Bureau of Engineering, Propositional Program. The $117 million in the forecast includes 14 projects that are in various stages of implementation that would be pre-design, design, and construction.
Are these projects already been approved and they're now being implemented, or are they new projects, or just where do they fit?
These 14 projects have been previously approved by the council as well as the mayor at the budgeted authorities. There's no change to the project budgets from the approved budgets that the council has already
This is
approved.
just funding to get these projects constructed.
That's correct. It's just to sustain implementation of approved projects, propo projects.
All right. Could we provide the clerk those 14 projects so that they're part of the committee report?
Yes, sir.
Okay. And then let me ask on the, to the CAO, when you asked on the $252 million of your refinancing, now, just so everyone's clear, when that occurs, that actually lowers the community's property tax?
Yes, that does.
That's $20 million savings?
Yes, correct.
Okay, so the other issue is that why are you asking for 600 million capacity and you're only going out for 250 million in bonds?
It all depends on market conditions. Currently, we could identify 252 million, but we don't know in 2 months where the market will be. And so we want to be able to have that flexibility that in 2 months when we see more savings, we can actually go ahead and do the refunding.
And when you do the refunding, all that comes to council for approval anyway?
Yes.
Okay, so so you're just looking for capacity, for flexibility, but as you make those decisions, and that's all about saving money, that will come to council?
Yes, we will have to come back for you to approve certain documents, such as like the preliminary official statement.
No, I don't have any.
I have a statement to make. My name is Marilyn Garcia, City Attorney. One of the recommendations is to substitute the City Attorney's ordinance to accurately reflect the maximum refunding possible of $600 million instead of the $125 that's in the original filed ordinance. So I've given the city clerk copies of the substitute version, the only change being the dollar figure. And that should be implicit in the recommended approvals would be to implement the substitution.
So we would be approving the report and the substitute ordinance?
Yes.
Let me just ask one other question on, any sense, because we're going out for TRAN and then going out for the refinancing and then 125 million, how that may impact the market itself?
Because TRAN is short-term and the GEO bonds is long-term, you have different buyers, so there won't be an impact.
There's no conflict?
No conflict.
Okay. Any other questions? Okay, we'll, with that one request that we add the 14 projects to the clerk's report, that we'll move this item with that instruction, and we will adopt the amended ordinance.
Thank you.
Okay.
The next item is item number 11. Again, this is continuing from the June 6, 2011 meeting. Housing Authority of the City of Los Angeles and City Administrative Officer reports relative to the request to waive the sums accrued by HACLA for payment in lieu of taxes. And the Housing Community and Economic Development Committee waived consideration of the above matter.
Good afternoon. Melissa Fleming with the CAO. The Budget and Finance Committee meeting held last week. The committee heard and discussed reports from HACLA as well as the CAO relative to a request from HACLA that the city waive HACLA's pilot fees, payment in lieu of taxes fees, for the years 2005 through 2011, and an estimated total amount of $14.2 million. At that meeting, the committee requested various additional information, and the authority as well as the CAO has provided supplemental reports to address those requests.
Does HACLA have any comments regarding the CAO's report?
No, we were in agreement with the CEO's report.
Let me just
You're on 11, right?
We're on number 11, yes. Let me just ask, because the CAO report recommends that there be further study of the $9 million, I'd ask that we do that within a 2-week period as opposed to a 30-day period, so that we can do all we can to see whether there's any ability to assist Hakala on this, and that we move forward on the 5.2 million that is not in dispute. And so that we asked, do we have a meeting in 2 weeks?
Yes.
Okay. We asked if we put in that agenda.
I just want to know a little bit more about the 5.2 for the summer youth employment program. Someone could, that I've seen here.
That's not specifically for the summer youth program.
Pardon me?
It's a combination of items.
Yeah, I see a 1.2 million for the summer lights program,
It should be either 400 or 500,000 for summer lights, 1.2.
500,000 for rec and park.
Summer youth,
I see.
youth jobs, and then there's $1 million for rec and park.
And that's for youth within the housing authority property,
On the jobs,
on the job.
that's the count that we gave, but the process is that it actually, my understanding is, maybe the CEO will clarify this, but I think the process is that the money goes to the mayor's office, and
Goes to
there's a group
CDD.
that decides on
But
it.
the thing is, we want to, there are certain council districts that have added money to that program, earmarked specifically for their district. We just want to make sure that the money that you've set up,
Our intent was for the public housing sector.
that's what we want, that intent to be fulfilled.
Okay, very good.
Yeah, on that particular note, there's $100,000 for the Mar Vista Summer Activities Program,
Yes,
and that is the Mar Vista Gardens? Can we
yes.
say that?
Yes.
Okay. Yeah, my only problem is I'd like some more money in my district for the one in Oakwood, the Oakwood Park, for a summer lights program. Is there any way in which I can look back into that and see if we can find some monies for that? It's a critical part in Oakwood. It's separate from, obviously, Mar Vista Gardens, but it's a vital part of the community, and I've been really sensitive to it, and I'm just wondering if there's any way to report back for something for that.
Let me ask you if you could report back with that on the 9 million that's coming back in 2 weeks.
Okay,
That'd be
can
great.
do.
Thank you.
Not relevant to my district, but do you need to do anything to tighten it up to make sure that the money you want to go to the right
I think
place
we got
goes to
to,
the
I think
right
we got to
place?
work on that, because CDD has been given instructions that there's at least, I think, 4 council offices have given individual money for their district, and then there's a citywide pot that every district will benefit from, and then there is a Hakala pot that we want to make sure that their residents get access to those jobs. So there's several pieces, and I think we'll ask the CAO if we can get with CDD to make sure that all those recommendations that were made during council and during committees, that they actually activate them.
Exactly. Thank you.
And then let me ask, one other thing is that on the CAO report of June 10th, that was information, but I'd like to just amend their one recommendation on page 4, is that we'd like to instruct the Housing Authority to provide an annual report to the council and mayor each year by April the 1st, to be heard during the annual council budget hearings, in order to request waivers of payment in lieu of taxes, fees as applicable, and the report on the actual expenditures associated with the pilot fees previously waived. So we'd like that report, instead of by July 1st, we'd like it to be done by April 1st, to be a part of the budget process.
Okay, no problem.
Sense.
Okay. So we'll do that, and within 2 weeks, we'll come back with that instruction regarding, was it Oakwood?
Yes.
Oakwood, and the other 2 items dealing with the Century Boulevard, and also the $5 million allocation dealing with housing and Section 8. So we'll move that with that instruction. And let me just, let's see Sharon and Karen, they feel left out.
I was going to say,
Could we
come on
ask-
up.
Could we ask the CLA's office also get involved in that CDD issue of making sure that they implement what has been directed by council? All right, next.
Next item is item number 13, and that's the city treasurer's investment and cash management report for the month ending February 28, 2011.
We'll deal 13, 14 at the same time.
And item number 14 is the city treasurer's investment and cash management report for the month ending January 31st, 2011.
Good afternoon.
Good afternoon.
Could you just give us an overview on these two reports, and particularly if you had any additional information that would be subsequent to your February report that would give us insight as to the condition of the city's treasurer?
Good afternoon. Stephen L., interim city treasurer, and with me here is Rick Coyrell, one of our investment officers. Rick will give you an overview of the investment and cash management reports. And really briefly, I will tell you a little bit about the economy. Last week on Wednesday, the federal government released the Beige Book, which is commentary on economic conditions by the Federal Reserve District.
Steve, talking to the mic, we can barely hear you.
Sorry. I said that last week the federal government released the Beige Book report, which is a commentary on economic conditions by Federal Reserve districts. As I said, it was released on Wednesday. In that report, it was stated that economic activity in the United States continued to grow in April and May, but higher food and energy prices, severe weather conditions, and supply disruptions caused by earthquake and tsunami in Japan put pressure on consumers. With that, it is important to note that the GDP grew at an annualized rate of 1.8% in the first quarter of 2011. The CPI, the Consumer Price Index, grew at a rate of 3.2, but at the same time, month over month, it grew 0.4%. I know that folks who drive and people who eat probably find it difficult to believe those numbers, as gasoline and energy prices actually went up over the last year about 19%. Unfortunately, those numbers are not used in calculating the regular CPI. The unemployment rates still continue to be high. In the United States, it's about 9.1%. In California, it's about 12.1%. In LA County, it's about 11.7%. Just to touch on the city's investment portfolios, we do believe that since the immediate financial service report, where we give you revised numbers with regard to interest earnings, it is likely that we might see a slight increase over those numbers at the end of the year, probably about $1 million this year, in addition to what was reported in the FSR. If you have any questions, we'll be glad to answer them, but Rick would give you a little overview on our investment and cash management reports.
Very good.
Okay, this is Rick Coryell. As far as these two reports covering the months in the core and reserve portfolios, were both managed, again, the core to a more liquidity standard, and the 6-month liquidity for the city, it looks pretty high. As far as the reserve portfolio, during these months, we managed them pretty much close to the benchmark, and all the stats were pretty much close to the benchmark, and performance was close. Since then, these two reports, January and February, rates have come down considerably from the 2-year, has come down from about 80 basis points to roughly around 40 basis points as of today, and then the 5-year has come down from around 2.25% to now 1.57%. And as far as GDP, the changes between the GDP numbers that we've been looking at, they've been revised downward during this time. The reason, and they've been revised downward from the Bloomberg survey that we constantly monitor. From 3% was in these reports, now it's down to 2.7%, and that's for the rest of 2011, and then GDP for 2012 looks like about to stay the same, estimated about 3.1%. And I think Steve commented on the unemployment rate that actually rose a little bit in May to 9.1%. Looks like, and depending on whether or not rates, rise, depending on the depth and also the duration of rising rates, depends on whether or not the portfolio would, obviously the portfolio has incurred some significant unrealized gains, but could be reversed if rates rose. But depends on the depth of that and also the duration of those rate increases.
Let me just ask, is the primary, if you look at the January, February report and you look at the reserve portfolio, is the primary reason for that significant drop is the interest rate totally, or is there other issues, or is it to deal with our investment strategy? Or
I'm sorry, the drop in what?
when we look at the January to February reserve portfolio, which is the $4 billion one, we show a significant reduction. I'm just wondering, is that the product of interest rates? Is that investment strategy, or just what would cause that kind of drop on the rate of return?
Oh, you're talking about the rate of return?
Mhm.
Sorry.
You talked about rate of return, but you also talked about $4 billion?
The rate of return on the reserve portfolio when you look at January and February.
What page are you talking about?
It's probably on, are you talking about page 4 on each report? Each month, again, this is isolating the month's returns. It just depends on what happened with the index. If you look at the benchmark had a negative return in February, but it had a positive return in January. And then our total return has been that. And it looks like it lagged a couple basis points, our portfolio. Our portfolio has been consistently more conservative than the benchmark. We don't own any foreign names that the benchmark has, a small portion. And also some other lower credit quality bonds that we're not allowed to buy. Those credits have actually improved. So a couple of basis points could be attributed to those non-investable assets that we were not able to.
Would that be the same reason for the core portfolio to do better than the reserve?
The core portfolio is managed to a more conservative index, being a T-bill, even though we're allowed to buy commercial paper, and we're able to also take advantage of rolling some bonds from reserve into the core and save on transaction costs. So the duration could be a little bit longer. We're holding a little bit longer than a 91-day T-bill, plus it's a little bit higher in credit quality, lower in credit quality. So you're going to see probably consistent outperformance for the core. The reserve is a little bit more matched, a little bit is a different scenario than that because the benchmark is a little more riskier than the portfolio that we run.
Let me ask you, is there confidence from the Treasurer's Office regarding our strategy in the sense of how we're investing these dollars? Or is there something we should be tweaking or looking at for a different strategy?
I think that the overall strategy is still going to remain the same. Our investment and cash management policy, which we're supposed to revise periodically, is going to come up with we're going to come up with a few changes. I know that my time is numbered in the office of the treasurer, but I am working with the investment staff to make sure that we make a few changes. Some of those changes will have something to do with our banking in deposit demand accounts, and that is the retail banking that we have with Wachovia and Wells Fargo.
And we're still using that technology, what is it, Bond Edge?
We're still using Bond Edge technology. Currently, we are looking at another technology, which is by Bloomberg, which to an extent would actually allow us to combine the functions within Bloomberg and do some of the things that Bondage does. We're not quite there yet, but I believe that when we eventually do that, we're going to have some savings.
Well,
Yes, pardon me, multitasking here. When you look at the economy, what does your sensibilities tell you is going to happen for the rest of the year?
As far as looking at the economy, we pretty much rely on the Bloomberg forecast. A lot of us are, fixed income professionals, but, we try to rely on the professional economists to kind of do that kind of forecast for us.
That, what are they forecasting that you find comfortable with? So, I can share with you, I'm not happy, and I don't think it's going to get much better. And I think everything basically will be on hold until the 2012 election from a political standpoint. But I do believe the economy is in trouble, and I didn't buy any of this. We're coming out of the recession line,
right?
Ever. And I have fears right now that I don't particularly need to express, and I just want to get a comfort level from you about our investment strategy and what you think it should be and what you're hearing from the economists, and what does your mind tell you over the next 6 months?
We've implemented a couple strategies. Again, I think that a lot of our experts inside and outside were calling for rising rates. I don't think our group thought that it was going to be rising rates. We certainly didn't think it was going to be falling rates as fast, but we didn't want to play that interest rate type of bet. So we pretty much maintain a duration neutral type of strategy. Others were telling us to, modify duration, but again, our policy is to pretty much stick to the benchmarks, since the benchmark really defines our goals and risks. Along with that, as far as the economy, I would probably be along the same as you, especially when these reports were written. Is that the economy wasn't going to be as robust as forecasted, 3% GDP. It might even get revised down to low 2% GDP by the end of the year. But again, I'm just following the kind of trends that I look at. But I think that the economists, they're pretty much, they've been revising it down ever since the beginning of the year.
Mentioning the Treasury notes as a form, is there anything else that you feel comfortable with that because from my end, the lower the risk, the better. I'm not looking for risk with the people's money,
right?
Considering the reality of our situation. Are they the safest and most secure? Is there something else? For instance, do we do any gold or silver?
No, not in our office. We don't. In the pensions, they might do something as far as investing and stuff like that. But again, we're restricted to securities. We have been underweight finance names because of just the volatility in finance. So that could be another reason why we've underperformed a couple basis points here or there. We feel comfortable as far as the portfolio and the way it's positioned, and our finance exposure being very short, and we just don't want to take that added risk.
Councilmember, I just want to add that I want to say that the overwhelming majority of economic analysts actually do say that the economy is going to get better. The federal government has told us that.
I don't believe the federal government.
If you looked at there were a lot of headlines last week that actually pointed out to that. This is not necessarily my opinion, but some of the headlines that I saw last week included a rise in household income of about 1.2%.
I just don't buy this stuff, to be honest with you. I'm very cynical about how the feds view everything these days.
No, that was not from the feds. You will find that in the Wall Street Journal. You'll find that in Bloomberg. But then, in addition to what you asked a question regarding our strategy. We do have a strategy that's based on an objective that we're given by the state, which is the first is to protect the principal, the money that we have, to ensure that we have it and we don't lose much of what we have. The second is to make sure that we keep the city liquid at any time that we need the money to do our business, that money is there. And the third, which is not the most important, but it is still important, is to make sure that we maximize on our interest after taking care of the first two. So, when we do that and we have an investment policy which specifically directs us which directions we can go, we only buy fixed income securities, which is kind of like just the bonds. We don't get into the equity market where, the stock market, which of course over the last 1 year has performed pretty well, although has had sustained losses over the last 4 weeks, but it has been pretty good. We can't invest there because the state pretty much says we cannot. So our investment policy is very, very conservative, and I want to say that, over a very long period of time, the Treasury has not had any net losses to its portfolio.
Thank you.
Let me just ask, we'll move this item, but could you provide the clerk with a explanation on the terms or the phrase benchmark total rate of return, just so we'll have that as part of the committee report, exactly what that means. So we'll move that item with that instruction, those two items.
Okay.
Is that it? That's it? Thank you, we're adjourned.
Move on consent.
Have a good day. You too, Don.